with Kari.green Real Estate, and I'm really excited that you are here. Take a minute and like and subscribe. Make sure that you're not missing any of the valuable content. Are you a buyer? Are you a seller? Are you a renter? I have resources for everybody. Do you need credit repair? Oh my goodness. We have the best free credit repair service and access to some of the greatest experts in the world. So I'm really excited to be sharing all of this information, opening up the information vault. Let's not make home buying so confusing. The reason why you need an agent is because it is one of the biggest transactions you're going to make in your lifetime. And my job is to make sure that it works out well for you. At the end of the day, homes are going to buy, homes are going to sell. That's what the housing market is all about. But having a key team on your side to make sure that you win, that makes all the difference. Like and subscribe, don't miss a minute. Stay tuned and let's get started. Everybody, this is Kari.green with Kari.green Real Estate. And like I said before, everything has changed with FHA. Since COVID has passed and interest rates are going back up. And I have the privilege of working with some really, really great lenders. I choose lenders who are customer focused and have the same goals that I have as far as bringing excellent customer service, opening the vault. We don't want to keep the information to ourselves. We need everybody in our communities to understand how the programs can work for them. And we want to create more home buyers and fewer renters. With rents going up, there's just no reason to continue paying somebody else's mortgage when you can be investing in your future. So I wanted to bring in Daniel Curry. He's one of the lenders that I'm working with right now. He has the same passion that I do. So Daniel, tell me a little bit about you and where you are and how long you've been doing your thing. You're with what company? Tell me a little bit about yourself.
Perfect. Well, first and foremost, Kari, thank you for having me. As you had stated, I'm Daniel Curry. I'm with Guild Mortgage here in Bellevue, Washington. So local to the area. I'm a Seattleite myself, grew up in the area. So been in the mortgage lending space for a couple of years now. Love being able to have the ability to change people's lives through real estate.
Absolutely. Absolutely. So we're going to be talking a little bit about the FHA program. So first of all, what is FHA and what kind of a little synopsis about what FHA is about and why it was created in Washington?
So FHA program is a program that is designed to be able to help borrowers that either don't have a long history of credit or may have had, they're good people that have a bit of a tarnished past, if you will, as far as credit goes. Ultimately, the reason it was created was to give accessibility to home loans for more people that just need help kind of getting back on their feet and moving towards a conventional loan product, if you will.
Absolutely. So kind of off script here a little bit with up until very recent history, it has been cheaper per month to rent than it has been to purchase. Have you found that since COVID has happened, the interest rates have gone up? And with the moratoriums in Washington state, has that continued to, has rents continued to outpace as far as monthly affordability, or are you finding that mortgages and rents are actually more comparable?
You know, honestly, they're more comparable than we would think they would be. The big thing with it is if you can afford to rent, you can likely afford to buy.
Right.
At the end of the day, you know, there are certain people that renting is still ideal for, and those are for people that aren't planning on staying in a location for more than a year or two, or looking for a more temporary basis. But when it comes down to people who are just looking for the most cost-effective option, a lot of times I can get somebody into a home for less or equal to that monthly mortgage or that monthly payment for rent. And the reason for that is because typically speaking, when people are renting out their homes, they are going to charge a rent that is equivalent or higher than their mortgage payment is on that house. Otherwise, it just doesn't make financial sense for them to do.
Right, absolutely. So when it comes to FHA, the FHA program and down payment assistance, those kind of go hand in hand, right? So with that, we kind of talked about where that down payment assistance comes from. But one of the myths that I am always dispelling is that at the end of the day, people assume that that's a grant that doesn't have to be paid back. So can you explain how that grant works and the second mortgage wrapped in?
Absolutely. So down payment assistance through FHA or through Washington State is a program that allows you to get a silent second mortgage on the house. And what that does, it allows that second lien position to give you the down payment and part of your closing costs. So on an FHA loan, you pay 3.5% down at a minimum. You can get either 3, 4, or 5% down payment assistance from Washington State. The myth about that never having to be paid back, there is some truth to that, as far as a lot of people confuse not having to be paid back with not having a monthly payment on it. So the way it works is it goes into the amount for that loan goes into second lien position and stays there as a silent second. There's no interest, no payment due on it. Now, it gets satisfied when you either sell or refinance the property. So it does get paid back, but between when you purchase and when it does get paid back, there's no payment and no interest on it, which makes it super lucrative.
Absolutely. And so it's not a grant, it's a second mortgage on your house. Is
correct. Correct.
And it's recorded with the county, just like anything else. And there are some requirements as far as your debt to income ratio and taking the class. But that class is not just any first time homebuyer class.
No, that class is done through Washington State. There's online version, or I'm sorry, there's a virtual self-paced version that you can do. And there is a version where people like myself and you would teach the class. It is a 5-hour class. It's well worth the time spent because, number one, you're not eligible to get the program, take advantage of the program without having it done. But two, there's so much good information in there that is coming directly from the professionals that understand these loans and understand the markets in and out.
Right. Absolutely. So with all of this being said, right? So what are the qualifications? I know that I'm seeing all over the internet, so we absolutely know that the minimum credit score requirement has been removed at this time. From what I'm understanding, we don't know how long that's going to be. That could come back.
Correct.
But for now, that minimum credit score has been lifted. And so we're talking about debt to income ratio and what other qualifications do we need to have to be able to qualify for a loan? And what is a realistic credit score? So not having a credit score minimum doesn't necessarily equal not having a credit score.
Correct. So to address a couple things, maximum income for Washington State bond program is $180,000 a year. So the average person is going to qualify based on their, the amount that they make each month, their annual salary. You're right. For FHA borrowers, there is no credit score requirement. However, they do take into effect our automated underwriting system findings, which is a program that I run everybody through. And that is that program is going to predicate whether or not the credit profile seems worthy of somebody being eligible for credit. Are they being responsible with their credit? So just because they remove that credit score requirement or minimum doesn't necessarily mean that credit scores don't take account into it, but it allows us more lateral flexibility to be able to look at a client's ability to repay the loan and say, okay, they made mistakes 5 years, 10 years ago that may be bogging down their credit score to say a 580 credit score or a 600 credit score. That being said, those don't automatically negate your ability to access these funds. So there's that end of things. For VA side of the VA, you can get a first-time homebuyer loan through Washington State with down payment assistance with VA loan as well. That does require a minimum of 620 credit score. So FHA is the one that has eliminated the minimum credit score on it. Debt to income ratio, which includes the monthly payment, mortgage payment, and then any of your other minimum monthly obligations. So your credit cards, car payments, student loans. This doesn't take into account things like insurance, cell phone, gas, water, sewer, things like that. Is 50%. For FHA requirements. Sometimes with extenuating circumstances, there's ways to kind of push that a little bit higher, but typically speaking, 50% is the absolute maximum we can do. And the reason for that is we don't want people to get into a situation where they have a loan that they can't afford to repay. We still want you to have the ability to pay your loan and still have money left over, correctly budgeting.
Absolutely. Absolutely. So when we talk about the types of properties, I know that it changes every year. So FHA is pretty regimented about what they're willing to put a loan on, right? So we all know that while the appraisers are the same, the appraisal standard is different between a conventional loan and a FHA loan, specifically because people who need FHA loans are not likely going to have the funds to be making significant repairs and upkeep. And so what are some of the we know no cracked windows, no chipping paint, some of those simple things. But in talking about, like, for instance, mobile homes, a lot of them are coming in and we're having people come and they're like, oh my gosh, I found this $250,000 mobile home, but it's in 1971 is when the build date was. So can you talk a little bit about what those requirements are and why?
So in June 15th of 1976, HUD released a quality certification, if you will, or changed the quality standards on how manufactured homes were built. They made them safer. They made them last a lot longer. And what it did was it made it to where the HUD regulations changed. Effectively, what happens is because of the HUD changes in their guidelines, most mortgage companies and banks will not lend on manufactured homes that were built before June 15th, 1976.
Perfect. So that's one of those myths that I wanted to dispel too, because I have always, for a long time, you hear, well, if it doesn't have a closet, then it's not a bedroom. And so it's only a 2-bedroom or a 3-bedroom, but really it's the septic system, right? So when it comes down to it, I have been told that, oh, no, it's 20 years or 50 years or whatever prior to. So each year it goes higher, 1976, 1977, 1978. But you're telling me that it really is this solid date prior to 1971.
Correct. So the date doesn't change. The date doesn't move. There are some situations that are the outliers that would have a date. I believe it's 2013 for like single wides that some manufacturers won't, or some lenders will not lend on older for single wides. But as a general blanket statement, June 15th, 1976 is the cutoff date. I have ran into them where it was June 13th was a manufacturer 1976 and cannot do it because that's when the guidelines changed, and it's a very definitive drop dead date.
Perfect. Awesome. Well, that's really super helpful. So kind of getting into some quick nuts and bolts, is this the same application process as a conventional loan? And once you get it, if somebody has, because I also know that you can get down payment assistance with a conventional loan, but you have access to all of those programs. And does somebody come in and they say, okay, this is the loan product that I want, or are you able to really navigate to see what would be best for those people?
This is the hands down favorite part of my job, because I enjoy being able to give people options, put together different puzzles, if you will, and different ways we can make it work. And ultimately what happens is you come in as a borrower and say, I want to buy a home. Daniel, Kari, how do I do it? And what I would say is we sit down, let's go through your initial finances and just look at kind of a high level overview of what direction you may go, be headed. Do you meet the minimum criteria off the top of my head? Do you have any special circumstances? Do you have any situations where you need a certain obstacle found a solution around? And this is where I really get to take the time to get to know my clients and go through that process with them. But effectively, it's all the same process, an initial process. You're going to do the application. We're going to get the same assets, income, and credit documents from you to make sure that everything looks great. And then what's going to happen is I'm going to go through and look over that entire file and say, okay, these are the options that we have. And that's where I do a mortgage planning meeting, similar to like you do a buyer consultation meeting, right, Kari?
Absolutely.
So with all of my clients, I'll sit down with them and say, okay, these are some of the options. Let's discuss which ones, the pros and cons of each one, and figure out which one's going to work best for you. Because at the end of the day, you're the one who's attached to this mortgage. So you're the one who we have to make sure that that loan and that home fits you, your lifestyle, and your budget.
Absolutely. So when it comes down to all of that, we love to think that, okay, I'm going to buy a car. Here's the money. I'm going to take the car home. So tell me a little bit about how you've come across some obstacles, maybe further down that we've already made an offer. We're a little further down that path. We need to get this done, and an obstacle pops up. How were you able to navigate that? And were you able to navigate it quickly and close on time?
The short answer is yes. Every loan has a different obstacle. It has a different kind of obstacle. Part of my process I go through is to send the file through underwriting. And the reason we do that early in the process, before we ever offer a pre-approval letter for somebody, is because we want to mitigate as many of those surprises in the 11th hour as we possibly can.
So let me clarify really quick. You go through underwriting before you give me a pre-approval letter.
Correct.
So there's not going to be something pop up. You verify everything that the client has spoken about, and you have the numbers in front of you before I get a pre-approval letter.
Correct.
Awesome.
What we don't want to do is we don't want you out shopping for a home, let's say $600,000, and you only qualify for $500,000.
Exactly.
I have received the phone call on more than one occasion of a client bawling their eyes out, calling me going, I went with this other discount lender. They said I was qualified for this much money. We took and made an offer on this house. We put up our life savings to try to be competitive on this house. Now they're telling me that we're not going to close, or we're not going to close on time because of this issue or that issue. And it breaks my heart. I don't want people to get in that situation. So my process and the people I work with, we're very careful to mitigate that risk right out of the gate. If that does happen to somebody, that you've worked with somebody else and you are looking for someone to save you, I have closed loans in as little as 8 days to meet deadlines.
Awesome.
I have the hands down best team around to be able to get things done and done quickly. And we're all about finding creative solutions. If we can restructure a loan, however we have to restructure a loan to be able to make the numbers work to where you can get in the house. Ultimately, we'll do everything we can that's morally and ethically correct for the client at the end of the day.
Absolutely. Well, Daniel, is there anything else that you would like to add to this, just to kind of make sure that everybody has all the information they need to be successful as a first-time home buyer, or as someone who's a first-time seller and going into their next home?
What I'd really like to do is share a short story about a client of mine that is a longtime friend of mine. I actually asked him in preparation for this podcast or this video, asked him if I could share his story, and he said that he would absolutely love to because it changed his life. He was a longtime friend of mine. He called me and he said, I have a bit of a situation. The landlord that I'm renting my property out from wants to sell the house, or wants to sell the loan, or sell the land. I own the manufactured home that's on it. And what I'd like to do is find out what I need to do to buy the land. I said, okay, perfect. I can help with figuring out what we can do in this situation. I said, I don't typically do land loans, but I can help figure out how we can work through this. So long story short, we got the information, we pulled title on the trailer, or on the manufactured home itself, figured out that it was pre-1976. So we were dead in the water that way. He was crushed because he didn't think that there was any possible way he could afford a regular mortgage payment. I said, Pat, let's sit down. Let's just discuss this. Let's go through all of your finances and figure out what we can do. So we sat down, we figured out that he qualified for a FHA down payment assistance loan through Washington State. He was able to have afford more of a payment than he thought he did, just because he was under the impression you got to have 20% down and you got to do all these things. You got to have perfect credit. He doesn't have perfect credit. He didn't have 20% to put down. We were able to work with his agent, or one of my agents, and say, okay, listen, this situation, he needs help with closing costs, and we're on a very tight deadline here. We were able to utilize a program which is known as a 2-1 buy down program, which is where the seller was able to offer a portion of the proceeds from the sale of the home to help Pat with the down payment and cost. Between the down payment assistance program through Washington State and the closing cost help, and the buy down, we were able to find a payment that he was satisfied with, he was happy with. We were able to have him come out of pocket. I think it was for about $700 finally at closing, which is incredible. He was shocked by the fact that we were able to do that. And at the end of the day, we were able to put him in a much better situation. He was in a much nicer home, in a home that was his. He wasn't under the thumb of a landlord situation. He was able to achieve all these things. And he called me the other day and he's like, you've changed my life. And he says, I owe it all to just you being forthcoming with the information and me being willing to listen to that information and be coached. And I told him, I said, Pat, that's what I enjoy about my job, because I love helping people and love being able to show people that there's a path forward. And I know there's a lot of people that are discouraged right now with interest rates and the other market things that we're hearing about on social media. I encourage you to reach out to myself or Kari. We will coach you on how to win in this market. And then we'll continue to help you win in future markets down the road.
Absolutely. Because the market is going to buy and sell houses regardless, right?
Yep.
So the best agents, the best lenders, the ones who are going to be around for the longest are going to be the ones who open the vault and get the information out there. And
100%.
It's not so much that people don't know things. It's really about the information changing so quickly. And if you're not in it every day, you're not going to know.
Right.
So that's where Daniel comes in. That's where I come in. So I'm super excited to be able to introduce Daniel and Guild Mortgage. We're actually working together on another client story that I think we're going to be able to write together and really be able to come through at a time when the qualifications are a little bit on the sticky side. So I'm super excited about that. And
likewise.
Yeah.
They're fantastic people.
They are. I'm so excited for them. So, but I thank you so much for taking some time to hang out with me today. And I look forward to working with you in the future. And I'm sure there's going to be more information I'm going to need from you, because you are the mini guy and I find out.
Absolutely. I'm here to help with whatever anybody needs help with, answer any questions that you guys may have, whether it be you or people that are watching this video, or friends, family, anybody. Give me a call, send me a text message, follow me on social media. We're happy to help any way we can.
Awesome. Well, I'm really excited, and I will chat with you some more in the future, okay?
Thanks, Kari. Have a great day.
You too. Have a great Friday.
Thanks.